Trade breakdown. This is AXS, a 70% long trade I performed a couple of weeks ago. It was a leverage trade at 6x. If you had performed this as a spot trade, it would have been at least 11%. So let's take a look. The price action was in a downtrend for a few months, and as a trader, I was waiting for a reversal pattern to indicate that the trend was about to change from a downtrend to an uptrend. But for confirmation, I also needed this medium-term resistance line, which was holding the price action back, to break. So to zoom in, let's have a look. The price action has several attempts of breaking this resistance level, but there's a lot of sellers, but eventually the sellers get exhausted and the price action comes up and puts a candle body close above this resistance line. As a trader, I will wait to buy the retest as it's a safer entry. So the price action comes up a little bit and then comes back down to confirm that this resistance line has flipped to support. The support and resistance flip. I then enter the trade here, and the price action comes up quite promptly and quite healthily. However, as it approaches this trend line, which would be a good first take profit price point, Bitcoin was giving me as a trader mixed signals about which direction it was going to go in. And if Bitcoin, as an example, had decided to go down, then this would have impacted my trade. As a measure of caution, I simply took profits here, just below this support line, which gave me 11% spot, 70% 6x leverage. In this case, the price action did continue higher because Bitcoin did not go down. However, as a trader, I did correctly identify that there was uncertainty in the market because not long after it came up to this high, it quickly sold off. The price action has since come back up, but as a trader, you have to effectively manage risk. And even though in this instance, if I had not sold here, I would have had greater profits, the risk and uncertainty was too great. So I decided to take profits just below this trend line. This is how you should be trading. Not wishing, not hoping, realizing that there is uncertainty in the market and it might go the wrong way, and just getting out and taking profits. Why? Because if I take profits, I win guaranteed. If I wait for higher profits in the face of uncertainty, I risk losing all of it. So in this case, the price action is still in a healthy uptrend. But if there's any uncertainty, take your profits. The money is made in the middle. As an example, I could have bought the bottom of the pattern. I could have bought as the double bottom was forming, and I could have had profits of 51% spot, and at 6x leverage, that would have been several 100%. However, coming in here adds significant risk to the trade because there's no confirmation of a trend reversal. The price action could have simply just rolled over. This is the lesson you can take from this trade. Don't try and catch the top. Don't try and find the bottom. Wait for confirmation of a trend change, but take profits if you get any indication that the price might come back down. I also just want to point out this invalidation line on my chart. This line here represents the line where the trade becomes invalidated. So I buy in here after a breakout of the price action and where this resistance line flips to support. But if something happens in the market where the price does not go up, it in fact comes back down beneath this trend line again, flipping it from support back to resistance, my trade and the reversal of the trend becomes invalidated. So I will need to exit. So if the price action hit this invalidation line, I would get an alert and I would look to exit the trade either at a minimal loss or at no loss. It's very important that your stop loss or whatever strategy you use to minimize loss is determined by whether or not a trade has become invalid or not. So the premise of this trade was a trend change and a breakout of a medium-term resistance line. If that premise changes because of a sudden market shift, then I have to exit my trade, because if the price action comes back here, the possibility of it hitting this price point anytime soon is low. So this is how you manage trading. You consider your risk and you have a plan for exiting if things don't go your way. So hope that offers you some trading tips. And before we go, let's have a quick look at our winning top altcoin pick, REN. So when I posted this chart on the 7th of October, the price action was here. and it was a buy the breakout trade to confirm this inverse head and shoulders was valid, to confirm a reversal pattern in the price action. However, in this case, the price action did not manage to come up high enough to break out of this line and confirm this reversal pattern, and instead it rolled over and put in a lower low. This then confirmed the head and shoulders, inverse head and shoulders, was invalidated, and the downtrend continues. Then the price action puts in a higher high, which is an indication of a potential trend change. Bearing in mind, as a trader, I am now forgetting about this reversal pattern as it hasn't been confirmed. So I'm now paying attention to the price action putting in a higher high. So how do I then confirm the trend change? I tried to confirm it with this inverse head and shoulders, but it didn't play out. So how do I do it now with putting a higher high? Well, firstly, I wait for a higher low. I get a higher low, and then I need to determine which trend line do I buy the breakout of. Which trend line is going to represent confirmation of the trend change. Now, we clearly know that because the price action failed to have any significant upwards movement following the breaking of this line, there is another line at play here. So if we go back and have a look at the price action from a few months earlier, you can see that this trend line has got more touches and is acting more as support than this trend line. So traders will know that in order to confirm a change in the trend, it is in fact this trend line which needs to flip from resistance to support. And when the price action did successfully put in a candle body close above this line, that is when the price action pumps up by about 80%. In summary, we had an inverse head and shoulders. In order to confirm the trend change and enter the trade, we needed the inverse head and shoulders to break this line, which is the confirmation line for this pattern. That didn't happen, and the downtrend continued. Then the price action gives us more traditional indication that the trend is changing by simply putting in a higher high. As a trader, I wait then for a higher low, which confirms that we're now in an uptrend as opposed to a downtrend, and I then just need confirmation. It's no longer going to be this line because that line was for the inverse head and shoulders. However, this trend line here previously acted as support for the price action. So this is the line that I need to use to buy the breakout. And if I had, of course, bought the breakout here, we would have had quick profits within a very short amount of time. Difficult trade, but that's how you do it. In the next video, we will take a look at price targets and how to use them to minimize risk and successfully take profits. So stay tuned for that. Until then.